Hey guys, Mike here. So, I normally don't put videos out on Friday unless something happens. And obviously I saw these two interviews last night on Fast Money, and one was with a former trader of Citadel, and the other ones were, two retail investors that are involved in AMC and other meme stocks, and what they want to see changed. And you know me, the reason why especially the one from the former Citadel trader kind of spoke to me was because the last 60 days, what have you seen me talking about? I've been putting out videos on black pools, naked shorting, market makers, showing you how they manipulate penny stocks and growth stocks and all that stuff. And it's just important to me because I believe knowledge is power. And I don't like running around with blinders on or anything like that. I need to know how it works, and it can actually make you better at getting in and out of trades and just understanding how the game is played. Understand, this is a game. That's what it is. Seriously. And right now what you see going on is a tug of war, like a battle, because you've never seen former traders coming out of market makers and talking about dark pools and how they reroute, and you're going to see that in this video. Hearing it from him, at least it's legit, right? You hear it, not just hearing from me. This guy worked on Wall Street, worked for these companies, these big market makers, and so it gives it credibility. But also, you didn't see retail investors getting put on these mainstream channels like Fox Business, MSNBC, whatever, with Jim Cramer. They're going there with him. All kinds of stuff. You never saw that. You never heard anybody talk about dark pools, right? And all the naked shorting being a spotlight this big on it, okay? And so that's why I wanted to put these out there. There are no commercials during these videos or anything like that. You don't have to worry about that. Just go straight through. It's pretty short. So take a look, educate yourself, listen to them, and think about what you would want to see change.
Right, our next guest says the current market structure is broken and retail traders are getting a raw deal. Let's bring in Dave Lauer. He's a former high-frequency trader at Citadel. He is now CEO of Urban AI. Dave, great to have you with us.
Thank you so much, Melissa, for having me on. It's a real treat.
Why a raw deal? What about the deal is raw?
I think there's a lot about our current market structure that's overly complex. And if you ask any regulator, they will tell you that this is not the market structure you would design if you were starting from scratch. And it's something that's been layered on year after year and decade after decade. And frankly, the point that we've gotten to is one in which a lot of incumbents have been able to structure it exactly how they want it to be structured because they're making a lot of money and they are able to wield a lot of political power. And I think we've really lost sight of the two primary purposes for markets, which is price discovery and capital formation. And price discovery is so critical that happens mainly on stock exchanges, on lit markets. So this issue that you just brought up with half of all trading taking place off of exchange and 70% or more in stocks like GameStop and AMC, I think is a real problem, and it's costing everyone money. It's costing the retail investors money who are trading through their brokers and all of whom's orders are being sent to people like Citadel and Virtu, but it's costing pension plans and mutual funds money because they're the ones trading off of the exchange quote. And if that quote is wider because of all this off-exchange trading taking place, and by some estimates, 25% or more is how much wider the spread is than if all of those retail orders were to make it to the exchange. So if they're trading against a wider spread that's 25% too wide or artificially widened, that's costing pension plans money. That's costing mutual fund companies money. That's where retail truly has all of its wealth. And I think that's a big problem.
So they're getting a raw deal because they have to pay more under this current antiquated system that was built by incumbents, you say?
Yeah, that's right. And when you have the internalizers in a de facto duopoly, you have other issues around corporate concentration of power and antitrust. And Gary Gensler has said exactly that in his SEC testimony, or in his congressional testimony when he was becoming the SEC chair, and in his first testimony. This is an issue that I think is going to get a lot of attention, and I think that concentration of information is also problematic, right? If 70% of GameStop is trading through Citadel and Virtu, and they're also making markets on exchange and they're the designated market maker on the NYSE, for example. They have a huge information advantage, and that kind of information advantage means that they have a lot of power to set the price of that stock. Now, it doesn't mean that they're affirmatively manipulating it. I'm not saying that, but it does mean that they have a lot of power and they can swing it, in all sorts of ways to help improve their profitability or change the quote at which they're then internalizing.
And so, of course, this is something I've been talking about for a while now. These things he's talking about, it's just, it's like music to my ears. It's not like, validation or something. Thank God, somebody who has worked for these companies is actually saying this stuff. And this is what I'm talking about. Knowledge is power, right? The next question I asked him was, how can retail investors help themselves? And listen to this answer.
They can take a good, long, hard look at their broker. And how does their broker handle their orders? Now, if you're a retail trader, it is very difficult to get away from a broker who is sending their orders to this duopoly of internalizers. However, when the retail broker sends their order to an internalizer, the internalizer has a certain amount of profit that they're going to make, and then they have a certain amount of money that they can rebate back to either the broker or the retail client. So if they send it back to the broker, that's payment for order flow. If they send it back to the client, that's price improvement. They get a better price on their execution. Some brokers take nearly all of it as payment for order flow. Other brokers don't take any payment for order flow. They just give it all back to their client as price improvement. So if you're a retail investor, you can say, well, I probably want to go with the broker who gives me everything in price improvement. That's going to add up over time. And it does get to another issue that I think regulators need to address, which is best execution. And are these retail investors really getting best execution if you're measuring it against an artificially widened spread? And it's okay for some brokers to take everything in payment while others are giving everything in price improvement. I can't see how those things can possibly both be best execution. But the problem is, if you ask a regulator, they will tell you, and this is a direct quote, that trying to enforce best execution is like trying to nail Jell-O to a wall. And I think that's a real problem for markets.
There are a lot of issues that are raised on the Reddit boards and the chat boards, Matt, in terms of what is wrong with Wall Street and how things should be. What is your number one gripe? What's the number one problem in your view that needs to be addressed by the SEC or regulators or whomever?
From more of a higher level view, I think it's kind of insane that we've gotten to this situation that two 20-year-olds are coming on the show asking for more transparency in stock market plumbing. The amount of unknowns, the delay in getting data reports, all of it's ridiculous. And right now, we just want more transparency. I think from that higher general level, it's just the field is clearly tilted. We're not engaging in a fair game across the board. There's just different rules for different players, and we're just asking for a fair shot across the board.
Trey, same question to you.
I would speak on the exact same thing. This is something I find very fascinating. It's the amount of retail investors that have got into the stock market in the last 12 months, right? Pre-COVID and pandemic, right? There was about 20% of actual transactions on the market were retail investors. Now it's 35%. Now, an even more mind-boggling number is off-exchange transactions, the transparency that Matt was talking about. It's about 50% of actual transactions that take place in dark pools and off-exchange trading.
Dark pools.
I mean, just the name dark pools, doesn't that, it sounds like something that you shouldn't even trust, and it's not transparent, right? You've got the T2 settlement system, you've got big brokers saying, but look at this, you're saving money on transactions, when in reality, it's really not, it's pennies compared to the millions of dollars that is, coming from the expense of the retail investors.
And of course, the big question they're going to ask now is, what would they like to see changed? What would you like to see changed? I'll give you my top two at the very end.
I'd like to see what sort of systemic changes we can make. I think there's a huge opportunity to learn from the last 6 months of experience that's taken place in the stock market, specifically around heavily shorted stocks, momentum trades like AMC and GameStop. How do we address failure to delivers? How do we address hard to borrow securities getting naked short sold? How do we address astronomical, margin debt? What are the things that we need to do to fix the high frequency trading? There's a lot of big things that have led to this pivotal moment that we're watching unfold in front of everybody's eyes right now. That's what I'd like to know.
And so I'm kind of right with this guy right here. I mean, my top two, and I'd love to hear yours in the comments, what you think, or shoot me an email, is one, it makes no sense to me. I mean, if they have to hire Palantir to do this. But as far as these dark pools are concerned, they were made for a good reason. They've been going on since the 1970s, as I told you. And so, but again, greed runs amok. It always does eventually. And so what I would like to see happen is somehow some software be implemented across the board, whether it's from Palantir or whoever, and it says that on 2 different cases here, let's say that usually on, let's say, Ford Motor Company, they're normally sending 20% of sell and buy orders through the dark pool. Well, all of a sudden, if that pops up to like 50 to 60%, that's a problem. Like, you know, or maybe it's not a problem, but there has to be a reason for that. Okay, we have to be a reason, and especially if it's tilted one way or the other, like just the sell orders, the majority of sell orders are going versus buy orders, and there's a huge fluctuation in that stock. We need some kind of software that alerts the SEC. It's very easy to do, folks. We can go into space, for God's sakes. We can shoot rockets from here into somebody's window in another country. I promise you it can be done. If we can find Osama bin Laden in some country, wherever he's at in a house, okay, we can do this. And it literally sends an alert to the SEC. Boom, it sends it right over saying what's going on. So we get it in real time, not months later. Like, what did you do that for? It has to be, maybe there's a good reason. Maybe there's a good reason. But we need to know why, okay? That's the kind of stuff we need. And software can do that. Easily software can do that, okay? And the other one is simply this naked shorting. 3, 4, 5x leverage, how they're borrowing these shares they don't even have, all this crazy mess. We know what's going on. It's being exposed, right? And so there has to be a way. This is another thing software can help with. And, you know, I'm not the guy, obviously, who can do software, but I guarantee you hire something like Palantir or something like that, they can figure it out. You can almost guarantee they can figure it out. Okay, if they can figure our trading patterns out with all our social media sites and track all that with AI, they can get this done. So that's my top 2. What is your top 1 or 2? I'm curious to know, okay? So anyway, hope you got something out of that. Have a great day. I'll see you later.